Okay, we'll go ahead and get her started. All right, so the recording has begun. Good morning, everybody. This is Jomo Stewart here at the Fairbanks Economic Development Corporation. It is Tuesday, January 19th, if I am not mistaken. Today's Energy for All Alaska Task Force meeting. The subject is the budget. We're about to start a new session. Actually, tomorrow, I believe it commences. And one of the largest items on that agenda will be the budget, as it always is, but particularly so over the course of the last few years. So we have with us Mr. Larry Pursley, former Deputy Commissioner of Department of Revenue, among a great many other things. I believe his last job was top of the journalism school down at UAA. Is that correct, Ms. Pursley?
Well, I was a visiting professor, visiting instructor, UAA for journalism, and I finished that just last month.
Okay, well, outstanding. Well, sir, we won't delay you. We have a lot to talk about. So if I can just hand it over, please.
Okay, thank you. Right, as Jomo said, the legislature is convening this week. They're not organized, so they don't know who's going to be Senate President, House Chair, committee memberships, but they're going to convene and keep working on their differences. And what I'd like to talk to you about today, I think this is only 11 slides. I want to move through it quickly so there's time for questions and discussion, because I've always found that is much more productive than just me droning on. But the problem Alaskans face, the problem the legislature faces as they convene this week, it's a matter of time and money. Do we have enough time as a state to wait for more money to appear to pay the bills, aside from where the hell is the money going to come from? But then also, do we have enough money in savings to spend while we wait for the time to catch up and more money to show up? So if we can go to the next slide. What the legislature is dealing with is we've pretty much run through all the other savings accounts. So it's come down to withdrawing earnings from the permanent fund, which is what it was set up for decades ago, and using that annual withdrawal to pay for public services and the dividend, fighting between the two. So just to give you a sense of what is available, last financial sheet from the Permanent Fund Corporation, November 30th, shows almost $9.5 billion that they call uncommitted and available. And that's in reserve. That's not the principal. They've already accounted for the withdrawal that is being taken out this year, fiscal year 21, to pay for public services and dividends. And that 9.5 billion number also accounts for the anticipated 5% of market value withdrawal for next year that the legislature will be deciding in the next few months. So the permanent fund says, hey, we're looking ahead to the next fiscal year because that's what the legislature is working on now. Look at that, you got about 9.5 billion you can spend. And even that 9.5 isn't all real money. Of that 9.5, 7.1 billion are what's called realized gains, profits they've taken, and that money's in the bank. 2.3 billion, or more than a quarter of it, is what's called unrealized gains. It's money that was there on November 30th. Depending how the investments went, that number is going to go up or down on a daily basis. So you look at what's in the permanent fund earnings that really are just general fund money and can be spent with a vote of the legislature, and the governor says, okay, we got to get money in the economy. We got to pour more dividend checks out there in calendar 2021. So the governor's proposed a spring draw on the earnings reserve of about $1.2 billion, so that Alaskans can each get an additional $1,900 dividend this spring. And then he's proposing the regular fall dividend, a $2 billion draw, so that everyone can get their so-called full dividend this fall of $3,000. So he's looking more than $3 billion additional draw from the permanent fund this year, so that Alaskans can get $5,000 in dividends this year to help the economy, which obviously has been hurt by the pandemic. So next slide, it comes down though to the details. You just can't keep writing checks and not think about what's behind it.
Larry, I'm sorry, sir. Just so I'm clear. So again, I'm looking at, so I'm still on the first slide. So it would be the 3.069. That's just the 5% draw.
Mhm.
Or just that identifies it, but the
Right.
the 1.2 and the 2 billion.
Additional.
Okay.
Yeah.
So that would be 5+ billion.
Well, 6.3. Yeah.
6.3.
Yeah. The heavy draw on the earnings reserve. The money's there. Question is, will it always be there, and how long will it last?
Okay. Thank you, sir.
Okay. So, in promoting these big draws to pay extra dividends, the governor's going around, does video, tells people, oh, hey, don't worry, the permanent fund gained $10 billion, earned $10 billion on its investments between March and December 1. Well, yeah, sure, that's true. But what he is not telling anyone is before the fund earned 10 billion in those 8 months, it lost 7 billion in the first 3 months of the year. And that's really important because you say, oh, I got this 10 billion windfall. I can draw a few billion out of it. Truth is, from January 1 to December 1, the fund gained in total a net of 3 billion, not 10 billion. Continued to add to that in December. It was a good month for investments. January seems to be holding its own, but as those of us who have tracked it, we know that the permanent fund earnings is just a constantly changing number, and it is not 10 billion in one-time gains as has been represented. So next slide. Now, as I mentioned, the question is, you've got money, how long is it going to last? So if you do the standard 5% of market value draw from the permanent fund to pay for public services, the budget, and whatever you can afford on dividends, plus the 2 additional draws the governor wants this spring and fall for more dividends, you're looking at taking out more than $9 billion from the fund. Now, the trustees, Permanent Fund Corporation Board of Trustees, have recommended for financial stability, for certainty, that you keep at least 4 times that 5% annual draw in the earnings reserve, which would be about $12 billion. And looking at it, we're there. We've got 4 times. We got 12 billion to cover next year and succeeding years, but there's always that risk. In 2009, the permanent fund lost in that fiscal year $6 billion as the financial crisis hit the world. So the trustees are saying, you can always have another year or a couple of years or some bad years. To be safe, their recommendation is keep 4 times what you're going to need every year in that fund so you can weather the bad period. And we're so reliant on the permanent fund because for more than half of the past 30 years, we did have the Constitutional Budget Reserve Fund. We've been drawing that down, again, for more than half of the past 30 years, filling budget gaps. Depending whose projections you look at, that Constitutional Budget Reserve will end the fiscal year on June 30 with somewhere between 600 million and $1 billion, which is pretty much the minimum you need to leave there for cash flow for the state. Maybe you can take a little bit more, but not hundreds of millions of dollars. So
the prudence of that 4 times number in the liquid account would seem manifest the way we went through the ERA and the great bulk of the Constitutional Budget Reserve.
Yeah, I would think so. It's current needs versus long-term stability. You can, obviously you could write a $3, $4, $5 billion check on the earnings reserve this year. It's not going to bounce, but who knows what's going to happen with the economy globally, Alaska, our investments. You wouldn't want to say, well, gee, I took a lot of money and spent it last year, and then the market tanked and I lost a bunch of money on my investments, and we had a bad year and I need to take out more, and it's just not there. That's the risk. Is it a 2% risk? Yeah, it's a lot higher than 2%. Is it a 90% risk? No, it's not that certain, but the trustees have said play it safe and keep 4 times what you need each year in that accessible earnings reserve.
Okay. If you don't mind, Larry, if I could just give a quick reminder to all the viewers. Again, I am monitoring the chat box for questions, and I do apologize for semi-monopolizing the questions so far. So I don't have to monopolize. Please feel free to take yourself off of mute, though, if you have any questions as we proceed.
Yeah,
Thanks.
and I'm happy to be interrupted. It's not personal.
Thank you, sir.
Okay. So the next slide, you think, okay, what's my longer term solution? And all of the stuff we discussed, the fact that, well, you're really dependent on this one pot of money, the earnings reserve, there's a lot of demands on it. The governor's come up with his plan, which is he's asking for the legislature to approve a special election this spring on an advisory question, asking Alaskans, okay, we'll pay this big dividend this year according to this 1982 formula that no one's followed for the last 5 years. But after that, we will split 50-50 between dividends and public services, whatever gets taken out of the permanent fund earnings every year. So that would be an advisory vote. But then an advisory vote in spring 2021, but he's also asking the legislature to put 3 constitutional amendments on the November 2022 ballot. And the reason for November 2022 is constitutional amendments can only go on a general election ballot. So those would have to be put off till November of next year. He wants 3 amendments to the Constitution, 1 a spending limit, 1 that says no new taxes without a vote of the public, period. And the third one says, okay, you took that advisory vote for 50-50 split. Now let's put it in the Constitution, turn the permanent fund into a true endowment model rather than this line between principal, which can never be touched, and earnings, which you can spend as general fund money. Let's just say, eliminate that line. It's a true endowment model. You take out, in this case, if that's what's adopted, 5% of the total market value each year, no more than that. And the permanent fund trustees like that. They feel the time has come and have felt that for many years to.
Can I interrupt there? John, he's here. So is the governor's proposal, when he's eliminating, is for the constitutional amendment, eliminating the line and creating an endowment, is he specifying a withdrawal amount, the 4 or 5%?
No, the governor has not specified anything.
So how, do you have any idea in his proposal how that would be determined?
Well, because I don't think the legislature put it on the ballot, but no, he has just said, I want a constitutional amendment, but has not said 5%, 4.5%, 5.25%. He hasn't even really addressed, he has not addressed whether the dividend should go in the Constitution. So he's given no specifics on spending limit that he wants in the Constitution, no specifics on what qualifies as a new tax. So it was just a very broad brush for what he would want in the Constitution.
Okay, thanks.
Sure.
Larry, Doug Isaacson. So in your estimation, just on that first bullet, eliminating the line between permanent fund principal and earnings, do you feel it's prudent to be ambiguous in that regard, to give the legislature the ability from decade to decade to determine what is beneficial at that time according to markets, or should it be specified?
Yeah, I think the lack of a percentage in the governor's presentation was not a decision on his part not to propose one, just not to propose one yet. I think everyone who does look at turning the permanent fund into a true endowment envisions you would, in that constitutional amendment, it would include a maximum annual draw, but the governor did not propose that percentage. Doesn't mean he's not going to, it just didn't do it this time in this December presentation. But everyone who I've talked to about this as well. If you're going to do it, you got to put a maximum in there, just like North Dakota has done, just like Norway has done for their sovereign wealth fund. As we know, if there's no max, the number would keep creeping up. I have heard, there's a couple legislators who would say, well, let's set a max in the Constitution, but then allow you could break the max any given year if 5/6 majority of the legislature approves it. My sense is that if something like this were to go on the Constitution, I think it would just be a straight maximum percentage. Don't sense a lot of interest in trying to play games. Well, 5/6 can do this, or 3/4 can do that, or 9/10 can do this. It just close the door and leave it that way.
Hey, Larry?
Yeah.
So I just pulled up the constitutional language. Is it necessary to have a constitutional amendment to, quote, eliminate this line?
It is, because the Constitution says that the principal is protected, can't be spent, but the earnings are just general fund money and can be spent with 51% vote of the legislature. So it makes, and they're all invested as one pot, but in terms of how you can spend them, you could get to the earnings reserve, drain it all if you want with a simple vote. So I think the feeling is you really protect the whole thing by treating it much like universities and other sovereign wealth funds say, you can take no more than X percent of the market value of the fund each year.
Okay. We do have a question in the chat box. Does the special spring election preclude any further legislation or votes on a change to the dividend formula?
Well, it doesn't preclude it. It's certainly, if in fact the legislature approved a special spring election, and I think it complicates the hell out of things, do they actually vote on the budget and the dividend before the election? Or do they say, well, we're going to postpone budgeting and dividends until we see how the election turns out? I think it politicizes it. It slows it down. Given the state of the economy and uncertainty in municipalities, I think the state budget needs to be approved as quickly as possible so that people know, cities, boroughs, school districts can make plans. If you say, well, we're going to, and it's hard for me to think, how could you pass the dividend, say in April 5th, and the next week go to voters for their opinion? I don't sense a lot of support in the legislature for a special spring election. Even the ones who don't want to make the hard choices admit it's their job to make the hard choices, not go wet your fingers, stick it in the air and see which way the wind is blowing.
Okay. Thank you.
And as many of us remember from 20-some years ago, when you go to the public with an advisory vote on the dividend, you'd better be ready to deal with the outcome, and it may not be pretty.
Okay, thanks. Do you have any further questions? Okay.
Okay.
Thanks.
Next. So this all gets to the question of what I'm going to spend money on, how much do I need, matching the state's revenues with expenditures. And that's the debate we've had in Alaska for years. We're having it again now. In addition to saying, I want bigger dividends this year, take more money out of the earnings reserve, put some protections in the Constitution. The governor, in his budget proposal this year and his 10-year plan, says he proposes cutting an additional $400 million from the state budget over the next 3 years. I was at a presentation, I gave a presentation last week to the Alaska Support Industry Alliance and Resource Development Council, same issue, and a legislator, Ben Stevens, the governor's chief of staff, was on the presentation. And when it got to budget cuts, there was a legislator who said, well, so if you're talking 400 million in cuts over the next few years, really, there's no way to do that without taking it out of the big spenders in the budget, K-12 and Medicaid, Health and Social Services. What's your answer to that, Mr. Chief of Staff? And Mr. Stevens' response was, well, that's a loaded question. I'm not going to answer that. I don't know, it was loaded. I thought it was pretty accurate. You're not going to get $450 million out of the budget unless you go after the big items. So I would not bet on the legislature approving those. I think the appetite for wholesale cuts are just not there, but that's what the governor's proposed. The governor's also said, okay, 2022 or fiscal year 2022 that starts July 1, the economy is still reeling from the pandemic, but by the next year, we'll have rebounded, we'll be healthy enough so that the economy could bear, quote, additional revenue measures. He provided no specifics, certainly sounds like new taxes. And interestingly, his 10-year budget plan says, okay, in fiscal year 2023, which the legislature will work on next year, he says there's a $1.2 billion hole in the budget, which will be filled by other revenue sources without providing any specifics as to what those other revenue sources would be. My argument, just to close this slide, is if you think you're going to have additional revenue sources of that magnitude starting July 1, 2022, which is 18 months from now, you've got to pass the legislation this year. If you're talking income tax, sales tax, business tax, any kind of broad-based large tax, it's going to take a long time to set up. So if you really are saying I'm going to have 1.2 billion in other revenue sources in 2023, you got to do something this year, or you're never going to make that date.
Hey, Larry,
yeah.
As an order of magnitude, what's the base operating budget this year? Is roughly how much?
If you talk about K-12, Medicaid, state debt service, pension obligations, the operating budget, the minimum capital budget to recapture all the federal money that requires a state match for highways and airports, I think the governor's proposing like 4.3 billion, give or take. I'm doing that off memory.
So essentially an extra, we'd be looking at or hoping for an extra 25%
Oh
of
yeah,
revenues.
it's a ridiculous number. I'm sorry. You know, I do find it ironic. Keep in mind, the governor said no new taxes until the public votes in November 2022. So how can you plan on new revenue in 23 when you can't do anything till the public votes in November 2022? It's ironic that the only easily accessible source of additional revenue that's in the hundreds of millions range would be to change existing oil taxes, which we just voted not to do. And I'm not proposing that the legislature go back and do that, but as you look at it, if someone says you're going to have hundreds of millions in additional revenue in 18 months, but no new taxes till you get permission, well, the only thing you can do is raise existing taxes, and that's the only one we got that raises any substantial money.
So
And I'm
Larry,
sure the governor's not proposing that. Yeah.
just on
Yes.
that, Doug, again, so could it be instead of taxes that he's counting on increased royalties because of more resource development? Of course, with the Biden administration, that might be a little dicey. How much in new businesses that are created, corporate business taxes would generate that much? I mean, what kind of an increase would we have to have?
I mean, it's unrealistic to think in 18 months you're going to have volumes and volumes of new oil. Conoco, which has done a lot of great work in National Petroleum Reserve Alaska, has got the Willow prospect. Last I saw, I think they were talking 2025. Oil Search, the Australian company that's trying to develop the Pikka unit, I believe also is looking at 2025. You know, new oil just takes a long time to come along. And if you're looking at, boy, maybe, you know, businesses do better and they pay a little bit more in corporate income tax, we're talking millions, a few tens of millions. There's just not that much there.
Okay, next in line, we had John Davies and then Rep Hopkins.
So just a quick comment, you know, Sarah Vansman and Homer says that the income taxes and things like that aren't revenue. So that wouldn't count either.
They're not revenue?
That's what she said.
Well, okay.
It's just, I'm just a joke. I mean, she's a joke.
Yeah. Yeah. Well,
Thank you, Rep. Davies. Rep. Hopkins.
Yeah.
Thanks, Jomo. Thanks, Larry. I always enjoy watching this presentation. I think it's my third time. I was on that RDC Alliance call last week, and that was certainly an interesting comment by Ben Stevens about where they would have to get those cuts. Yeah, especially the tone of that question. The 1.2 billion in additional revenue that the governor says we need by FY23, that's almost exactly the difference between the $1,000 dividend and that we gave last year and a full dividend going forward. Do you, if that continues to dovetail well, looking at what a 50-50 draw might be by projections for continuing to give such a large dividend, or do you think that is just based on what the budget itself, the operating budget, would need?
My sense is the governor's office just backed into the 1.2. They said, okay, in the next fiscal year, we'll split the permanent fund earning draw between the budget and dividends, and that gives you about a $2,400 dividend. In fiscal 23, we can project from the revenue forecast how much we'll have from oil and investment and tobacco tax, and there's a $1.2 billion hole. Well, we'll call that additional new revenue.
All right, that does make sense. Yeah, just sort of seeing the problem and saying there's a magical wand to fix it, but not proposing what that magical wand's going to look.
Right, it's the way I used to solve math problems in high school. I'd do the math, and I turn them into the teacher, and she said, well, your math is right, but that's not an answer. Just sort of guessed.
Show your work, Larry. You got to show your work.
Yeah, well, I wasn't that good of a student. Probably because
that makes two of us. Thanks, I appreciate it.
Mr. Soley, Mr. Soley, if you don't mind, we have a couple of questions in the chat box. If I can just lob out one of those, and then I'll let you go next.
Sure. I'll let you read them.
Thank you. So from the chat box, how much revenue would Representative Wool's 2.5% income tax proposal generate?
Okay. I am not instantly familiar with that, but if I remember, if you did a tax, if you imposed an income tax on people's adjusted gross income, that would be, you know, before deductions or anything. If you had a 2% tax on adjusted gross income of people who live and work in Alaska, you're looking at about $500 million a year, at about a 2 or 2.5%. And I'm not sure if Representative Wool's was a tax on adjusted gross income or a tax on what you, a percentage of what you pay the federal government, but around 2.5% of your adjusted gross income raises about $500 million a year, roughly.
One more part on Representative Wool's bill. It also creates a sort of needs-based system based on your income for the dividend itself, where it gradually decreases in amount up to, I think it was $100,000 for your family, and then you get no dividend above that. So there's also some savings there that would not be revenue, but would be savings.
Mr. Soley?
Thank you. Thanks for being here, Larry. So just to understand kind of definitionally, I'm assuming that given that the governor's proposal for the constitutional amendments regarding the permanent fund wouldn't be on the ballot until the fall of 22, that this other revenue hole that, as you point out, is likely a plug number, that amount could be made up by the earnings reserve at that time. I mean, even though it's not quote unquote other revenues, that fund source would be available.
You could. In fiscal year 23, you could say, well, I don't have any additional revenue. I'm going to take another 2% this year out of the earnings reserve. You could. Certainly.
And I suppose that could happen in conjunction with legislative action that might have prospectively made changes that, as you point out, wouldn't be in place yet from an accounting standpoint.
True, but I think the permanent fund trustees, if you were to say, I'm going to overdraw the fund in fiscal year 21 to pay the spring dividend, I'm going to overdraw the 5% limit, statutory limit, not constitutional. I'm going to overdraw the fund in fiscal year 21, 22, and 23. I think the trustees would become mildly apoplectic that you're draining the earnings reserve, jeopardizing the fact that maybe it won't be there when you need it the next year for your 5% draw. And I think the rating agencies would look at us and say, we had some hope you guys would do the right thing, but we're losing hope and we would lose some notches on our credit rating. So there's consequences
Sure.
to spending it.
Appreciate
Doesn't can't, but you just got to be aware of the consequence.
And a possible course of action, not suggesting that would be the prudent. Thanks.
But you're right, it's an option.
Okay, we had one other question in the chat box, sir, if we could.
Sure.
Would Alaska receive any royalties from NPRA development? And well, what's that? How would that factor
Sure.
against the need?
So the state does receive 50% of the federal royalties for NPRA production. So they have been receiving money. If Conoco continues to develop in NPRA, the state will continue to receive more. But again, you're getting 50% of the royalty, not 100%. And there's provisions in state law that say when the royalty revenue comes in from the federal government, that 50% share, it first goes into a special account where the North Slope Borough and communities that are affected by development NPRA get to pull out money for their mitigation to cover their impacts first. Then what's left goes into the general fund. And I can tell you there hasn't been a whole lot left over the years, but there hasn't been that much production. As production ramps up, I think there will be a louder political fight over how that money gets shared, but you're not looking at hundreds of millions of dollars.
Thank you. All right, I see no further questions. We can move forward.
So another, just briefly, in addition to wanting to pass out additional dividends to help the economy, the governor is proposing on that special election this spring, besides for the advisory vote on splitting permanent fund draws between dividends and the budget, he would like to see a bond issue, the proverbial shovel ready. No specifics here. It talks about roads, renewable energy, ports. But because it would be a general obligation debt, a vote of the public is required. He's asking for it this spring. And I think, talking to legislators and others, everyone admits there's a long backlog, a large backlog of projects that should be built, repaired, maintenance. I think the political problem with this is going to be, if the legislature wants to go ahead with it, keeping the list manageable rather than everyone trying to jam in their projects and all of a sudden it becomes a $500 or $600 million bond issue, which means more debt. And then are Alaskans, if you go to the voters this spring, are Alaskans willing to take on more debt for the projects? Again, a timing question. If you approve a bond issue in the spring and say Alaskans vote for it, can you really do the bids, the mobilization, secure the material, and put people to work in this calendar year? You know, anyone who's worked on projects knows it's going to be hard to turn some of them around if you don't get the authorization till spring to get them out, get them mobilized, and start working. Some this year, a lot I think would go into next year. It doesn't mean it's bad. It's just they're not going to put everybody to work in 2021 on this.
Hey, Jomo, can I butt in with a local example of that, of what Larry just said?
Yes, sir.
The University Avenue project that, you know, we're being worked on right now and seeing the Chena, the bridge across the Chena River, of course, we all know that one. That was a geo bond project in 2010. So that's a general timeline for when those projects might be shovel ready in reality.
Yeah, you know, shovel ready was a word or a hyphenated word. I don't remember it existing 10 or 20 years ago, but it seems to have been adopted and it's convenient, sounds good, but not really sure what shovel ready is. Anyway, so just a few more. The next slide is.
Well, actually, Larry,
Yeah.
if we could just loiter here one more second. The last presentations I saw place the requirement down at the Port of Anchorage at a minimum of $1 billion.
Yeah, well, as I told the legislator, if the Port of Anchorage gets its hands into that 300 million, there'll be nothing left for anybody else. And I still don't like that Anchorage renamed it the Port of Alaska, so they thought it'd make it easier to get state money for it. It's still the Port of Anchorage. But that's
Thank you for saying that, sir.
that's just my personal crankiness about that.
Rep Davies, I see you come off of mute.
Yeah, I just had, in terms of the governor's list there, you talked, these are all construction projects as I see them. What about deferred maintenance? Is he talking about that at all?
I didn't see it in the statement, but my guess would be you can go to bid and construction and work on deferred maintenance quicker than what are called greenfield projects starting from scratch.
They're not as sexy, but they're probably as important, maybe more so right now.
Yeah, right. Don't build something new to you, maintaining what you got. Yeah.
Okay, thank you, sir.
Okay, so, and I think Jomo is going to make this available to people. The next slide is kind of just my attempt to lay out what I think is really an unrealistic calendar. So you've got this session where governor's saying, I want an advisory vote in the spring, a statewide bond issue in the spring. I want you to take more than 5% of the permanent fund to pay for a spring dividend. Then we have the special election and start the new fiscal year July 1, where the governor, want again to take more money out of the earnings reserve so you can pay a bigger fall dividend. Legislature comes back. They got next year, now you got this $1.2 billion hole in the budget, but you don't really know where the additional revenues are because you're here as a legislator in January 2022 trying to work on the budget and that hole. But if you're going to have a constitutional amendment that fall that says don't do anything, people vote, and can you match this calendar? What about the constitutional amendments? And what happens in 2023 if you still got that hole, you're drawing down your earnings reserve? It just, look, as well, many of us know, we've just debated this ad nauseum for 30 years since they set up since voters set up the constitutional budget reserve by constitutional amendment 30 years ago. And we are approaching not the end of the line, but we gotta make the decisions because we're running out of time. The calendar just doesn't work. And you put the one thing you have going for you, the earnings of the permanent fund, you put them at risk of drawing them down too low if you wanted to do everything. So just a couple more.
Actually, if we can give a moment, does anyone have any questions at this moment?
Jomo, I've got a quick one on the geo bond topic from the last slide. I've heard a little bit of questions, and it's more just we're looking into it. Is there a single subject concern over a geo bond project? So would you be able to put in deferred maintenance and transportation projects that are not deferred into a single geo bond to the voters?
It's been so long since I've read one of those. I think you'd be okay because my view, they're all public works projects. In the past, the state has had separate bond issues to pay for ferries or separate bond issues for ports and harbors. But I think since these are all public works projects, not things like, something like the airports are revenue bonds, so they don't even go to a vote of the public as a general obligation bond. So I think with careful wording, you could put them all in one.
Good to know. Thank you very much.
You'll definitely want to check with Ledge Legal on that, though.
Right. Yeah. Okay.
Thank you.
Like I said, just a couple more. So the notion on the next slide of a constitutional amendment, the permanent fund trustees 3 different times have adopted resolutions saying, let's treat this like an endowment, eliminate this distinction between principals and earnings, set a max that you can take out of the market value each year from the endowment. We'll manage the investments, knowing long-term, this is how much you're going to take out. The trustees in their resolutions have never weighed in on the dividend formula. And I think that's a big political fight in the legislature. Everyone agrees, we should protect the fund, endowment makes sense, but does the dividend belong in the Constitution? And if you think it does belong in the Constitution, do you hardwire the amount in the Constitution? Do you hardwire the percentage? Or do you just say, and there shall be a dividend, and leave it to the legislature each year? So that is a never-ending debate. Well, it's going to end at some point, but and the trustees are staying out of that. They like the endowment, how the legislature and the public deals with the dividend, whether it goes in as a shall be a dividend or must be a dividend, or how much it should be, or what percentage. That's really not their problem. I will say that the notion of, or the idea, notion, the economic law behind the endowment is, if, for example, you say, I'm going to withdraw no more than 5% of the fund's market value every year, averaged over the last 5 years, so you get some blending. The permanent fund corporations' own projections say they expect over the next 10 years to average 6.75% a year in investment returns. So even though some years you may lose money, some years you will make more than 6.5. If you withdraw 5%, earn 6.75, the fund itself is going to continue to grow based on those numbers: 5% withdrawal every year, 6.75% earnings. The permanent fund projects that by November 30, 2030, fiscal year 2030, the fund will be worth $80 billion, another 10 billion more than it is today, if you restrain yourself and they may continue to earn more than you take out.
But, Larry?
Yeah.
So talk to us about maintenance of the purchase power of the fund in that regard. Is that extra earning required for having the fund maintain its equivalent value in the future? Or does that come out under the 5% amount?
Actually, is it required? And the flip side of that is at 1.6% above, is it sufficient to maintain the purchasing power?
That's the question. That's what I'm asking.
Yeah.
I don't think it's sufficient, really. But
Right. A lot of endowments have reduced their annual draw to 4 or 4.5%. They had set them at 5 some years ago when earnings looked great, some of the hot years, but there are many endowments around the country. Well, I think Norway's at 4%, but many endowments in this country have said, 5% is a little rich. Maybe we should do 4 or 4.5% to ensure that we continue to protect against inflation and continue to grow in real dollars. But as we know, if you say, well, I'm going to be prudent and knock that 5% down to 4.5, well, you just lost another $350 million a year in revenue.
Mayor Isaacson, I saw you had taken yourself off mute for a moment. Did you have a question?
No, John answered or asked the same
Okay.
question another way. It was about inflation proofing, right? In the formulas.
Certainly, it looks for the next several years, inflation will be low, non-existent. What's going to happen with the virus? What's going to happen with world economy? What's going to happen with the new presidential administration? All those unknowns. So I think the point John Davis is making is, yes, you need to withdraw earnings every year to pay for public services and the dividend, but if you set it too high, are you jeopardizing your future earnings potential? And I think the problem for Alaska is if we are more cautious in annual withdrawals, it just enlarges the otherwise unfilled hole in the budget, or budget cuts, one or the other, right? New revenue or less spending.
Right.
or reduce dividend.
Right, reduce dividends, yes, without a question. So just one more slide on the permanent fund issue, just to try to give you some perspective. So on that last point, the trustees are saying, based on their projection, in fiscal year 30, assuming you limited yourself to a 5% draw every year and earned 6.5, the 5% draw in FY30 would be more than 3.6 billion. But if you withdraw 3.2 billion this calendar year to pay the extra spring and fall dividends, that money would not be there to earn income for the next 9-10 years. So if you withdraw an additional 3.2 billion this year, your 5% of market value draw in FY30 will be $200 million less than it would have been otherwise. That is the consequence. Spend it now, you have less sitting around earning money. You're going to have less money coming out every year on your 5% draw. By fiscal year 30, it would be about $200 million a year less. That would be the long-term cost of taking out $3 billion this year.
And Larry, that's assuming the average 6.5%.
Correct.
Right? If you had a
Right.
bad year, that number would be a lot bigger.
Right, right. There's a lot of assumptions, all of which could go caca. I think that's a technical term. Yeah. So one last slide in closing, because of course, how could you not talk about oil in Alaska? But we got to face reality. We have been in an investment state for years, last several years. That last point, looking at the state revenue forecast for the fiscal year 2022, which the legislature will be starting on as soon as they organize. Well, the state expects to take in more than $3 billion in permanent fund earnings from the 5% draw, 800 million from all oil revenues, not counting what goes to the permanent fund, less than 400 million from every other tax and fee coming into the state. So we're an investment state. The Department of Revenue in its December fall forecast said, hey, we think oil will be $48, $49. Next year it's actually around 56, which is great. But realistically, even if it inches up a little bit more from 56 to 60 and then holds 60 all next year, you're talking 250, 260, 270 million additional revenue between 48 and 60. That pretty much covers the budget, if it's a status quo budget, with zero dividend. Even a $60 a barrel, you're really looking at nothing for dividends unless you draw more money from the earnings reserve or start cutting spending. I do see some analysts who talked about 60 maybe as sort of a plateau later in 2021, 2022. That depends on Saudi Arabia, depends on Russia, depends on a lot of things. I haven't seen any analyst who's talked about 70 or anything higher. I think there's just too much extra oil out there in the world that even if it gets to be 60, countries, producers would bring on more oil and hold it down. So I think, and I think they'll keep producing from the North Slope for decades, but realistically, in terms of revenues that pay for public services and the dividend, we're an investment state, not an oil state. And we could talk about Anwar. My hope is that someday Ada is somehow able to recover the $12 million it put down on leases on Anwar. I'm not sure that was the smartest investment. I understand they did it out of hope, but look, even if Anwar leases go ahead, survive court challenges, Ada finds someone with deep pockets to underwrite seismic exploration, development, production, it's 2030s before anything comes out of Anwar, realistically. And the industry admits that it's just that long term of a project. So this is what we got. And this is the end of my presentation, which means certainly open for more questions.
Rep. Hopkins.
Thanks. There's been some discussion that constitutionalizing the POMV creates an inherent spending cap because then the rest of the revenue is, what we get that year. I don't feel that that is an effective spending cap because you can still spend all that there is and it doesn't allow for long-term planning. Do you feel that it would work as an effective spending cap, or do you think we would need some additional structure so we're not just depending on the price of oil still as that goes up and down?
Well, The 5% limit on the draw is, I guess, a step in a spending cap, right? Because it shuts off another source of funding, but certainly without a spending cap, or depending how it's constructed, if you adopted an income tax or a gross receipts tax or a sales tax and started collecting new revenue, and if Willow and Oil Search and in the pickup unit go ahead and you find, you could end up with more money to spend. So I think the 5% limit in the Constitution on withdrawals from the permanent fund is part of what would limit what you could spend. But if you really want an effective spending cap, you got to be explicit with it. Just politically, it's certainly difficult to come up with. How do you deal with emergencies, fire, and or unforeseen firefighting expenses? But so it could be drafted. But I think, short answer to your question, if you want a spending cap, you just probably got to do one.
And then on a quick follow-up, would it work to structure it the same way where you could put into the Constitution, the legislature shall adhere to a spending cap as provided by law, period, and then you put that into statute? And so we wouldn't be able to break it in statute, but we would be able to change it as needed.
Right. Well, and there actually is a spending cap in statute, and one, I don't want to say problem, but one factor in spending caps is, well, you probably got to account for inflation and population growth, because if you say, here's your flat spending cap, and your population grows, though we're not at the moment, or inflation gets out of control, which it's not at the moment, all of a sudden you actually, that cap, because it's so limiting, erodes your services. So if you take a spending cap and say, I'll allow for inflation, I'll allow for population growth, what you have now is a spending cap that is so high, we're not even close to it. So it's how you construct it, right? What limitations, what growth factors, what escape hatches. It actually gets kind of complicated.
Devil's in the details, and that's what we're dealing with in the borough. Thank you.
Yes.
Rep Soley, or excuse me, Rick Soley, you were next. Oh, okay. Mr. Davies, sir.
I was just going to say, I think that the fact that we have a spending cap right now in the state, and that it has hardly ever come into effect, is an illustration of why we don't need a spending cap. I mean, that's what we hired the legislature for. The general principle in the Constitution was that we are in effect supposed to be starting with a zero-based budget, and each legislature can look at the problem anew. No legislature can bind with certain restrictions, mostly constitutional ones, a future legislature. So I think to the extent that we can not talk about spending caps, we should just not talk about spending caps. I think it's either you're going to get it wrong and it's going to be a big problem, or if you get it right, it's not going to have any effect. And there's so much variability in our state situation that we're going to need the legislature to have all the tools they can have.
I would also maybe add, dealing with the budget, dealing with the permanent fund, dealing with dividends, dealing with COVID, dealing with all the other problems. We, as Alaskans legislators, we don't have the capacity to argue about a spending cap too. It's just not that big of a problem compared to everything else we got to deal with. So I'm with John Davies. It's let's deal with our other problems, and the legislature's job is to do annual appropriations.
Okay, Mr. Soley, you're still off mute. If you have a question. Okay, well then I'll lob out something cockamamie. There's been an idea, although when I look at these final slides, it's just math. I mean, this is all just math. And it looks like the permanent fund dividend is the sticky wicket that makes all of this hard. But in any case, I mean, there's been an idea of allowing permanent fund earnings to really be the funds that fund government, quote unquote, and then transitioning over and replenishing itself, both paying for government, but also replenishing the fund, which creates the earnings, and essentially taking major year-on-year revenues like resource development revenues and basing the permanent fund on that. or the dividend on that. Any thoughts on that kind of proposal?
So really sort of shuffling what you have, you're not adding new revenues. You're saying, okay, the 5% draw goes to the general fund budget, and the 800 million we take in from oil and gas tax and royalty goes to pay for dividends.
Yes, but again, it still leaves a giant hole.
Right, you still got that $800 million hole in the general fund budget, and you're paying out a $1,200 dividend. You know, this year, if there's no dividend this fall and no special dividend in the spring, and we State of Alaska budgets sort of kind of close, you know, depending on price of oil, within a couple $100 million. But you're right, it's that dividend. You start putting in $1,000 dividend, now you got a $650 million hole. A $2,000 dividend is a $1.3 billion hole. The existence and the size of the dividend is what really makes that number huge and insurmountable, other than, for the short term, just keep writing checks on the earnings reserve.
I mean, to a degree, the chickens have really finally come home to roost.
Yeah.
I remember you talking about this. I don't mean to date you, Larry, but
no, it's okay.
I remember you talking about this 20 years ago when I was 25, when I was new in the legislature.
No, I've still got, for older people like me, remember before PowerPoint and Zoom, we used overhead projectors with those plastic sheets that you'd write on with grease pencils. I still got those from 25, 30 years ago, showing the budget. Yeah, we got lucky. There's higher oil prices several times, sort of stemmed production for a while under the oil tax structure that was adopted by Murkowski and then doubled down by Palin. We went out real well for a few years because it coincided, those higher tax rates coincided with higher oil prices. And as the state settled the IOUs on oil tax and royalty cases and put those billions of dollars into the budget reserve, lived off that for decades, but we've collected the big IOUs. We've run them dry. They're all gone. Just smaller ones remain. So yeah, we're sort of at that decision point, and it's a miserable year to have to face it along with the pandemic, but we got to face it.
Mr. Isaacson, I see you've come off of mute.
Yeah, thanks. So Larry, we've been doing status quo arguments, as you say, for 30 years or more.
Doug, you're very low. Can you please lean closer to the mic?
Can you hear me now?
Yes, a little better.
Can you hear me now? Okay, sorry about that. So we've been doing this same argument and maintaining a status quo as a result for 20, 30 plus years, right? We've never really looked at what it would take to grow a state economy like North Dakota, which put in a cap of how much oil revenues could actually fund state government in order to protect its other industries. We haven't really been considering how to develop the state. So we've always continued to talk about the size of the dividend rather than what equitable investment in infrastructure, whether that would be roads or broadband development, such we're doing in Minto. We're actually out on the internet doing business. And so it's really important for us to have that broadband. Other villages would succeed in creating economies if they also had urban scale type of internet. But whatever the infrastructure is that would actually help communities create economies, as Rep. Hopkins mentioned, you know, it takes the university project is actually a 40-year project. DOT's been working on that plan for 40 years. Yeah, the GEO bond was 10 years ago, but for us to really develop an infrastructure, in your opinion, how can we change the tenor of this conversation so that it really starts looking at realistic, sustainable growth and not just rehashing one resource? the permanent fund.
Okay, just take, and I know it's after 9, people need to go. So real quickly, take North Dakota, right at their height before the pandemic killed oil demand. They were about 3 times what we're producing off the North Slope. They were approaching 1.5 million barrels a day. But unlike Alaska, which is wholly dependent on oil, when North Dakota said, oh, Bakken shale, fracking, we're going to get rich off this, North Dakota didn't change their other taxes. North Dakota has a sales tax. North Dakota has an income tax that allows them to not be overly reliant on oil and spend money on infrastructure and build out so they can, as the economy grows, the state gets a share of it through the income tax and the sales tax and certainly oil taxes. So then they can reinvest it back in the state. Without a sales tax and income tax, other than a barrel of oil, we don't make anything off any, the state. So it's really, from an economics perspective, if you want the state, which provides services, to capture a share of economic development activity, you got to have a tax so then you can fund the next economic development activity or promote, be it broadband. It's got to come from somewhere.
Yeah, and that's my point.
Yeah.
We somehow need to change the discussion from other revenues just simply being taxed to the goal, you know, like we're going to put a man on the moon in 10 years. So this is why we're going to call for resources, you know, whatever the revenue streams might be. Otherwise, we'll always be dependent and always circling around this vortex that's going to annihilate us. And Governor Dalrymple back in 2013 told us North Dakota legislature had set a cap on revenues to pay for government on 20% of oil revenues could be used for funding state government. I thought that was interesting, but that kept other industries alive, whereas we've destroyed forestry. Mining has never been a huge priority. And so it takes us decades, 30 plus years to get anything going, et cetera, you know.
Okay.
John Davies?
Yeah, I was just going to say, along those lines of, future economic development, we shouldn't forget the power of the university. The university does 90% of the workforce development in the state, and it also is the source traditionally in almost all of our developed societies for developing the intellectual capital that we need for the future. And if we're going to have workers that are going to take us into that future, we're going to have a stable funding stream for the university.
I would agree. And we're shortchanging that, which is unfortunate and really debilitating for the long term. So.
Well, that's probably a good place to end up this conversation.
Sure, something depressing, that works.
That's not what I mean. It seems to me that just like on the federal level, one of the glaring things that got borne out by this COVID pandemic, both political parties have had a really long track record of talking about the middle class. But when it came time to actually doing something for the middle class beyond taxing it to send money towards the ends, they had a challenge. We've had a really great track record here in this state of talking about the future, but really sinking our available investment capital into the now. And now being in a bit of a pickle because the demands of the now look likely to suck up any future investment potential we might have had. And how we resolve that tension. I guess whoever figures out how to resolve that tension and get everybody on board for a future, we'll definitely win the QB doll and should have a statue built for them in Juneau.
Yeah, well, we can hope.
Can I just throw in one last little thing?
Sure, please.
So in terms of the governor's proposal to do extra or even large dividends that really called for under the current law. The previous law, yes, but not the current law. I think that there's a very real possibility that under the Biden administration, there's going to be additional stimulus check, and that we should, as a state, rely on that instead of trying to spend our seed corn in order to generate those kind of stimulus checks.
Sure, because if the need is to get cash out to people quickly, and the federal government's willing to pay for it, and they can borrow money and we can't, and we could save our money for other needs. Makes sense.
So what we really need to do is convince the governor to call the federal stimulus money his extra dividend.
There you are.
Somehow I don't expect our governor will pat President Biden on the back on that one. So, but hey, if Congress goes along with it, as John Davies said, the end result's the same. If you get some more money into people's hands so they can spend it locally, that's what we need.
All right. Well, everyone, thank you so much, Larry.
Well, thank you.
Mr. Pursley, thank you again, as always. We have a thank you for you in the chat box. I'll read aloud because it's so true. Thank you, Larry. Very succinct and informational. And thank you for demonstrating state budget reality. We really do appreciate that.
I appreciate everyone spending time this morning and caring about this. So thank you.
Okay, I will be posting this, the recording online as always. Please know that, again, if anyone would like a copy of this presentation, I can email it to you directly. Otherwise, there is a version, not identical, but pretty close to, that you can pull down off the interwebs from the Alaska legislature, from the House Finance Committee meeting of, when was that, Larry?
Oh, it was 2 weeks ago, Friday. So that would have been
the 8th?
Yeah, the 8th.
The 8th. Okay. Well, all right, guys. Thank you so much.
Okay.
I'm not sure what we're going to be doing next week, but I'll let you know. Beyond that, though, everyone I hope everyone had a great long weekend. This is kind of off subject, but I just got a picture from my little brother. They were looking over the video of the I Have a Dream speech because they knew my dad was there. They did not find my father, but he just sent me a picture of my grandmother in the crowd from Dr. Martin Luther King giving the I Have a Dream speech there in Washington, D.C. So hope everyone had a good long weekend. Happy Inauguration Day. And hope everybody just have a good, safe, happy, healthy week.
That's
Okay.
too cool. That's too cool. Put it up on Facebook.
No, I'm good. All right, maybe. Grandma was a looker. Beyond that, again, we'll all be checking out the new session starting tomorrow. So let's all say a prayer for our Alaska State Legislature, see if they can truly wrap their heads around budget reality. All right, thanks, everybody. See you next week.